Good morning, good afternoon, good evening, wherever you are. Today, we're going to look at the markets. MicroStrategy, they've done something extremely good. We've got news about Grayscale, about the Bitcoin miners, about BlockFi, FTX, and a lot more. Please hit the subscribe button if you're not subscribed, and hit the like button as well. So, as we always do, we start with the markets. As you can see, it's been going sideways all last week and continuing on the same trajectory. The market cap, 916 billion today. So that's gone up a little bit because do you remember on Friday it was 908 billion. So now we're 916. So it's gone up over the weekend. At the beginning of 2 weeks ago, actually, it was at 1 trillion. So over a couple of weeks, we've lost quite a lot of market cap, but it looks as if it's coming up. It's just moving sideways, really, sideways trajectory. As you can see, Bitcoin dominance is still at 40% and Ethereum at 14%. So let's have a look at the bear and bull indicator. So as you can see here, token metrics indicator still at 6%, meaning we are still in a really bad bear market. Breakout strategy, nothing there. Low frequency trading strategy, again, 89% bearish, just like the breakout strategy, 84% bearish. So yeah, we're really in a very heavy bear market. So let's have a look at some of the performers. So over the last 24 hours, derivatives has been down. The meme tokens, they're down. Yield farming is down. Exchange-based tokens are down. DeFi and infrastructure are down over the last 24 hours. So a lot of reds there. And let's look at the top 20 daily returns. So Origin Protocol is up, which is the best performer at 14.68% over the last 24 hours, which is extremely good. As you can see, Robin Finance was at number 2 on Friday, but as you can see, it's dropped down now to, what's that, 2, 3, 4, 5, 6. It's dropped down to number 6. So it's dropped down a few places, but still 5%, great 24-hour daily return. And the worst performance in the last 24 hours, at the top of that is Stratis with 16%. NEEM, that used to be an extremely popular coin, but last 24 hours is down. Its return is down at 6.51%. So it's not done really well in the last 24 hours. And let's see how the price of everything is moving along. As you can see on the 1 hour and the 24-hour change, you have some green and some red. But on the 7-day change, you have quite a lot of red graphs there on the 7-day price change. So as you can see, over the week, a lot of them are down, but over 24 hours, we've got a lot of greens showing up on the chart. And so let's take a look at Bitcoin and Ethereum, as we always do. Bitcoin, it's trading at $19,622 each. That is up 3% over 24 hours, which is quite good because there was speculation that it was going to really dump over the weekend because today in the US is bank holiday. They're enjoying their July the 4th celebration. So, you know, happy July the 4th if you are from the US and watching this. Hope you have an excellent day. So with Bitcoin, as you can see, it's been going down and then up, but it's been floating around that range of 18,900-ish to 21, just let's say just below 22,000. So it's been floating around that range actually over the last week or so, last couple of weeks. So nothing, no big moves. It's just kind of looks as if it's consolidating. I mean, some people saying that it's going to drop further. Others have said that, you know, it's the bottom and therefore it's just going to consolidate sideways. We'll have to see. how that pans out over the next month. I mean, we have got a lot of indicators coming out this month. A lot of companies are going to be reporting their quarterly figures. So a lot of people are going to look out and see how these companies have done over the last quarter. And if it's really bad, then yeah, it could be bad for the crypto community as well, because it could lead to a lot of sell-offs. Ethereum, it's $1,150 per token today. That's up 4%, which is great to see. And let's have a look at the chart for Ethereum as well, so we can have a look at how it's plodding along. But like we said on Friday, it seems to be again in a chart, just like Bitcoin. You can see it's trading in a range. So, you know, 1,250 roughly towards that's the top end, and it drops down to around $1,000. Let's call it that. Just below sometimes there, 900 something. But it's been doing that range for the last week or so. So you've got it in a range there. Today it seems to be up, but trading sideways. And now to the news. And by the way, if you've not subscribed, please hit the subscribe button and also the like button. And if you've got any comments you'd like to say, please leave a comment underneath so that we can actually reply to them. MicroStrategy, very interesting. So they've purchased an additional 480 Bitcoins for 10 million. This actually on their part is extremely good, because what it's done is it's reduced their average price of Bitcoin. So the average price is now reduced to $20,817 per Bitcoin. I do remember when it was up at 30,000, as it says here on this tweet by Michael Saylor, the CEO. When they first started purchasing Bitcoin, it was, well, this is what it is now, 30,664, which is, you know, it's quite good, because if that goes up, you know, they've got 3 billions worth, or just under 4 billion, 3.98 billions worth. That goes up to 100,000. They will have absolute massive returns. Basically anything over 30, they will be looking to really have fantastic returns. So Michael Saylor is playing the long game. He's going to hold on to his Bitcoin and just wait for time, because he believes it's going to hit 100,000. Other people believe it's going to hit maybe 1 million by 2030, and he's playing that long game. So we'll see if it turns out that he was right. It's going to be an absolutely fantastic returns for the shareholders of MicroStrategy. It's a great strategy. I do like it. Michael Saylor is a fantastic CEO who believes in the concept of Bitcoin. Grayscale. Now, a little bit of background. Grayscale have a trust called GBTC. Now, this trust holds Bitcoins. So they wanted to turn this trust, which sells shares, effectively you buy shares in this trust, but they want to change it into an ETF, electronically traded fund. So they applied to the SEC. The SEC have turned around and said no, and they've rejected their application, so they can't convert it into an ETF. So the GBTC Grayscale Trust stays as it is. Grayscale are not happy about this, so they are going to sue the SEC. The reason is they're suing the SEC because they claim that the SEC has given permission for futures and options to be done with Bitcoin. Why not the ETF? They basically claim that it's a double standard. It's a good argument, an argument that I do agree with, but we'll have to wait and see how this goes on. Generally, these things take a couple of years to play out with regards to the SEC. It's not really a process that takes a very short period of time. It usually takes a while for it to go through the court system. So we'll keep you updated as it flows through. Miners. Something you need to know about miners. Miners basically, when they get the Bitcoin during bull markets, they keep the Bitcoins. They don't sell them. They just keep them. And what they do is they go out there and they borrow money in order to buy more mining equipment. On the flip side, when you have a bear market, as we're in at the moment, they have to sell off their Bitcoin in order to stay afloat. And that's what we have at the moment. A lot of public Bitcoin miners are basically selling off Bitcoin. You have this article here, which I did retweet. So if you check my Twitter at Kenneth Omoya, you can get a link to this article. And it goes through in detail, talking about the kind of issues that the miners have had, are going to have, and how they're preparing for it. But main thing to know about miners, during bear markets, they always sell a lot of Bitcoin. During bull markets, they accumulate, because the way they get their funds is to go out and borrow in the market. So at the moment, because it's a bear market, they have to sell their Bitcoin, and they have to effectively manage their operation cash flow extremely tightly. So that's a good article you should read. Zach Prince. So we're back to BlockFi again. They've been dominating the crypto news. But Zach Prince has tweeted out saying that they've actually now managed to sign an agreement with FTX US, subject to shareholder approval. And so the agreement basically gives BlockFi a $400 million revolving credit facility, which is subordinate to all client funds. That's the really important thing there. It means that everybody who puts their cryptos at BlockFi, they will be protected. If in any situation, they will get their money first before FTX US. But then there's another clincher. It also includes an option for FTX US to purchase BlockFi at a price of up to 240 million. Now, this is interesting. 240 million. This is a really, really small, because just recently they actually did a fundraising round where they did an equity round, and they were valued in the billions. So they've gone from being a multi-billion dollar company valuation to 240 million valuation. Something there tells me that their books must be really, really bad for them to accept that. There must have been a lot of issues going on there. But the good thing is they've accepted it. Client funds are safe. People can withdraw their funds if they want to. They can continue keeping their tokens in there if they want to, and earn the interest that you'd earn in these lending platforms. So that's good for clients, and that's a good thing generally for the whole of the ecosystem. On the flip side, these guys, Three Arrows Capital, well, the USA entity in New York, they've now applied for Chapter 15 bankruptcy protection. And quite interestingly, it's in the application, it's alleged that Three Arrows Capital owes a 675 million to one creditor alone. And it's alleged that that creditor is the Canadian crypto broker Voyager Digital. So this is really flowing over to other entities. In return, as we can see, I tweeted this out, Voyager Digital has suspended all trading, withdrawals and deposits. Now they say it's temporary, but we don't know. So we don't know how bad the situation is within Voyager. Are they looking for funds? Are they going to get funds to help them survive this? It's very unclear what's going on, but there's no trading. They've suspended all trading. They've suspended withdrawals and deposits. What most important there is withdrawals. So if you've got your tokens with them, you've got your crypto with them, you can't take your crypto out if you want to take it out. You can't sell it if you want to take it out and sell. So that's going to cause issues for a lot of people. So that's something to be aware of. At the moment, a lot of these lending platforms, like we saw with BlockFi, Celsius, Voyager Digital here, they're very, very shaky at the moment. Probably not the best time to have your crypto in these lending platforms at the moment, because until everything's cleared up, all the bad decisions that were made with regards to lending money to without enough collateral, after that's all cleared out, then yes, you can go back. But at the moment, a lot of pain is going through that sector, and therefore you need to be very careful about putting your crypto in that sector at the moment. You can use the decentralized ones such as Aave, no problem there, or you can go through and use the DAI, lend on DAI. I mean, there's loads of other decentralized options at the moment which seem to be safer. But like we always say, not your keys, not your crypto. So if you really want to feel safe, I would suggest just taking it out for a time being, waiting for things to clear up. Then you can obviously put it back if you want to continue earning that yield, because they do pay out some great yield. But this is not financial advice, so please do your own research. Another piece of bad news, Invictus Capital. As we previously explained about these guys, Invictus Capital, they were caught up in the whole blow up when Tether UST blew up. They seem to have lost a lot of money on there. They also were caught up in Celsius situation. Celsius, they've suspended all withdrawals. They're working through to try and see what they can do in order to be able to allow customers to be able to withdraw their money. Others are speculating that they might go for bankruptcy, which would mean that all customer coins would be lost. Nobody knows exactly how things are playing out because they've been very tight-lipped, but we hope things will work out for them. But the CEO and founder of Invictus Capital, Daniel Schwartzkopff, is a co-founder. He's resigned from Invictus Capital. He's put out a statement. Again, you can go on my Twitter. I've retweeted this, and you can go through and read his statement. But generally, it's not looking good. Previously, you had another director who was supposed to sign a statement during the liquidation proceedings to say that their entity in the BVI was solvent. The director refused to sign that. So things are not going too well. Their C20, which they did raise an ICO in 2017, they did their ICO for their Crypto 20. Well, that apparently, from a statement it put out, has a big, massive position within Celsius, and we know Celsius has extreme issues. So, we're not sure again. This is spillover. It's not really their fault. It's just spillover of the market. But hopefully things will work out with them. Now, token metrics. As you know, we use token metrics all the time. We love it. As you can see, they've got notable customers at these firms who use token metrics, at Coinbase, Facebook, Amazon, Uber. A lot of good companies there who use token metrics. And why do they use it? Well, because it provides everything necessary to analyze the crypto market. You get AI-driven ratings. You have model portfolios for 13 exchanges. You have exclusive market indicators, automated technical analysis, portfolio tracking, trade alerts, daily written insights, and a whole load more. They're great platform to use. We use them and we love them. If you do decide you want to join them, take a subscription, please do use our partnership link below, because we do have a referral link below which would give you a discount. As you can see here, an example. So this is an example of their low cap index allocation, and we've just selected here the weekly. They provide a daily one, a monthly one. We've selected low cap. If we didn't select low cap, click no. It gives you then none low cap. I mean, this low cap actually is really, some people call it the degen, but so we just thought we'd show you this as an example. So I thought I'd select the all. So that's all the tokens taken from all the exchanges or from different exchanges. As you can see, it's 163% up. That's the allocation that the AI has selected. and it's doing quite well there. I mean, Bitrex exchange, I mean, that looks to be doing quite well, 102%. So if you're on that exchange, you just come along, click on Bitrex and go through on that exchange and have a look. See, and those, if you have this portfolio there, yeah, you could make a fantastic 100% return. That's a doubling of your money. And it gives you all the details here, shows you how it's been performing. Look at that, that's great performance. Look at that performance, fantastic. And it gives you the current holding versus the previous holdings, and it gives you a whole load of information. You can have a look, do your research, and decide how to allocate your funds. Again, do remember this is not financial advice. Another element that Token Metric has that's really good, it is the TM grades. So as you can see, it grades everything. So anything above 80 is fantastic, means it's bullish. So you can look at OKB, which is a token, an exchange token. It's very bullish on it at 86%. So you can go ahead, you can do your research. It's 3 billion market cap, 7 million 24-hour volume. So 24-hour change 2%, 7-day predicted return 0.64%. But you can pick any coin you'd like, and it gives you the the rating. Look here, 78%, and then you can go through and have a look. And look at this, you've got a bearish one here, and you can say, okay, why is it bearish? But 66%, that's just under. I tend to like projects at minimum 70% that I do research on. But there's some here, for example, 55% Uniswap. Over the long term, I am very bullish on Uniswap, though it's got a very low at 55%, very low token metrics. But once I did my research on Uniswap, we quite liked what they were doing. We liked them long term. So yeah, the TM grade gives you great insights on the companies to investigate and have a look at. And like they say, they send you stuff. So for example, this is the infrastructure hidden gems. So all after analyzing projects, they then send you the ones that they think are good. And then you can have a look at it and you can analyze it yourself and make additional research before making decisions. So here, Audley Network, for example, they tell you why they like it, tell you about the investors, the team. And as you can see, the token's not out yet. So it's a really early. And there's another one, really early, tell you why they like it, tell you about the investors, the team. And again, with this one, there's no tokens out. And they also send you what's known as the NFT cheat sheet. Again, here they analyze a whole load of different NFTs, and then they pick a couple. And here you can see sneakerheads, and they've got one here that's pre-mint projects. In other words, it hasn't minted yet. And you go ahead, you can get the information. They tell you about them, give you the OpenSea link if they're minted, Twitter, website. Give you a whole load of additional details. They score them, as you can see, community, team, utility, innovation, whole load of things. Give you a grade, give you a whole load of additional information, the mint date, how much it's trading for, the volume, and then you can go and do your additional research. And here's another one, but this one has not been minted, so it's giving you really early information. Tells you about the founders. Apparently they were originally anonymous, but eventually they were doxed. In other words, somebody found their details and was able to tell the community who they were. And apparently one of them was a CTO of a UK-based startup called Hubble. So yeah, you could go and read through the details. You can have a look, and it is extremely good information. And thirdly, they also send you the Token Metrics Navigator. This is extremely good. Gives you information about the market update, what's happening. So as you can see there, the dollar index. Then it goes up there, Ethereum, As you can see, it gives you a little rundown about the Ethereum, gives you a rundown about the price, Bitcoin as well, gives you a whole lot of technical analysis on there as well, gives you price ranges. Also, they give you basically information of what they think is going to happen during the coming month. So they reckon that a crypto rally or stability will be around 7th to 15th, basically best time for vacation. So if you're thinking of taking a vacation, they're saying that's probably the best time. Again, this is information, but you have to do your additional research and make your own decision. They reckon towards the end of the month, there'll be a crypto decline with one big squeeze in the middle. So, I mean, that makes sense actually, because you're getting a lot of data that's going to be coming out towards the end of this month with regards to, first of all, you're going to have the CPI index, inflation index in the US is going to be released. So people are going to look at that. If it's high or if it's low, people are going to make decisions depending on how the figure comes out. And you've got the reporting season, and a lot of people are bracing themselves for tough times with regards to reporting. So I have a link in the description. You can go and click it. It's my referral link for our partnership. It will take you to the page. You can register. At the moment they have a limited time offer where you can get a free trial, and then after that you subscribe. It starts from around $19 per month, which is nothing. That's what it is at the moment, but you can get up to 40% discount on that, and that basically brings it to under $12. I mean, that is nothing. I mean, that is for the amount of information you get and for the amount of research you get from this platform, it is absolutely fantastic value for money. Great news coming up again. BTC holdings. In other words, the amount of wallets out there that has 0.1 or more of Bitcoins in them has reached an all-time high. So according to Glassnodes, they're now 3,676,536 addresses with 0.1 Bitcoin or above. Now 0.1, that's roughly $2,000. That is brilliant, and that's at today's market price of around 20,000. We saw it was 19,000 something we saw earlier on. So just doing a rounding off figures at 20,000, so 0.1. So you're looking at around $2,000 worth. So if someone were to have invested that amount and holds it over time, and if the value of a Bitcoin goes higher, they could make a nice return. But it's good to see that the amount of people with 0.1 or number of wallets with 0.1 Bitcoins or above are growing consistently. It's great news. As you can see, really everything's going up on that chart. Again, I've retweeted this chart on my Twitter, so you can go there at Kenneth Omoya and you can have a look at it if you'd like. And this is very interesting. Now, Tether USDT, okay, it should be $1. Okay, it should be 1-to-1, but in Argentina is 6% above. Now, why is that? Well, the finance minister or economy minister has resigned, and the reason being is because of inflation. As you can see, inflation in May hit 60% year over year. So a lot of people are worried about their money. So if you have your money in Argentina's native currency, 60% inflation, that is basically taking a big hit on your money. So that's why people are moving to the Tether stablecoin, because they want some stability. Now I think the US is around 8%, depending on who you speak to. Some people say 10%. But the thing is this, it's better to have it in something more stable than something at 60%. That's ridiculous. That's really high. And I can see a lot of people being unhappy over that inflation figure. And that's why they're moving their money into Tether USDT, just to try and safeguard their money. And because that was happening in exchanges, it pushed it up by 6%. the peg of $1. So it's something that Argentines are using, people in Argentina are using stable coins as a way to safeguard their money. And finally, the future of cryptocurrency trading is decentralized, and we're building the foundations to make that a global reality. This is what dYdX have said, the trading platform, and I do agree with them. Cryptocurrency trading should be decentralized, and they're building quite a great exchange. They're moving to the Cosmos, I think, but we'll see. At the moment, they are actually extremely good, but they're moving to a different layer 1, and we'll see how that pans out once they finish building version 4. If you want to keep in touch and see whenever I tweet things, because I usually tweet things that I think are good for us, you can go to my Twitter account. It's at Kenneth Omoya. I usually tweet things that attain to the crypto sector. Again, have a look. It's at Kenneth Omoya. Go there, have a look, and also please follow me. And also, if you like the video, please hit the subscribe button and hit the like button. Thank you, and have a good evening, have a good day, have a good morning, wherever you are. Take care and look after yourself. Goodbye.